You're watching Mirror 7 News. Stay informed, stay ahead for more news.
So, gold has done it again. But this time, it's on a whole new level. In 2025, the yellow metal has officially crossed a jaw-dropping $30 trillion in market capitalization, becoming the first asset in history to ever do so. To put that in perspective, gold is now valued at nearly 7 times Nvidia, and it has left behind giants like Apple, Google, and even Bitcoin, which is often called digital gold. The price of gold has soared to around $4.380 per ounce, up more than 60% this year alone, and about 13% just in October. It's a record-breaking rally that's caught everyone's attention, from Wall Street traders to everyday investors. And it's all happening in the backdrop of global uncertainty, economic strain, and rising geopolitical tension, especially between the US and China. So what's really fueling this massive gold rush? A few key factors are at play. Investors across the world have been pulling their money out of riskier assets and pouring it into gold, viewing it as a safer bet. The ongoing US-China trade tensions, fears of a global economic slowdown, and the anticipation of Federal Reserve rate cuts have made gold incredibly attractive. Even the US dollar, which is traditionally seen as a global safe haven, seems to be losing some of its shine in comparison. According to the World Gold Council, the total above-ground supply of gold is estimated at around 216,000 metric tons, and based on current prices, that gives us this $30 trillion valuation milestone. And while Nvidia, with its $4.4 trillion valuation, is the second most valuable asset globally thanks to the AI boom, it's nowhere close to catching up. Now here's an interesting point. Despite all this excitement, gold is still considered a non-productive asset. It doesn't generate dividends, interest, or rent like stocks or bonds do. Its value lies purely in perception, in how much people trust it as a store of value when everything else feels uncertain. That's why some economists see this surge as more of a warning sign than a victory. When investors rush to gold, it often means confidence in the broader economy is slipping. Prominent voices like Ken Griffin, CEO of Citadel, have even warned that this record-breaking rally could be a cautionary signal for the stability of the U.S. economy. Still, many experts expect the momentum to continue, especially as central banks and institutional investors keep increasing their gold reserves. Some analysts are already predicting the metal could reach $4.500 per ounce sooner than expected, if global tensions persist. Meanwhile, Bitcoin, the so-called digital gold, hasn't quite kept pace. It's up around 16% this year, which is modest compared to gold's 60% jump. But many believe that when the gold rally eventually cools down, some of that capital could flow back into crypto markets. For now though, gold stands unmatched, a centuries-old metal that continues to outshine the most innovative companies of our time, proving once again that in times of turmoil, investors still trust the oldest safe haven of them all. Stay subscribed for more videos.